And we are talking to Al Hensley, who is a top 25 mortgage originator, super producer. And we are so glad that you're here, Al, and that you take time out of your crazy schedule. People will probably look at this little video clip, some, right here in the, 2019, and who knows, someone might look at it 20 years from now. Sure. And just to give the audience light on what's happening, the Feds are meeting today to discuss dropping rates again, which I never thought in my wildest dreams they'd still be talking about. Well, Al, on the other hand, anticipated it, tracks the market, and so it's no surprise to him. But it makes his day even more busy than usual. And so we're grateful that you take the time to sit with us and chat about your experiences in lending. And we're going to cover how you got into it and what'd you do and what took you from, hey, I'm writing a loan to super producer status.
Sure. I'm happy to share that information.
Yeah, and so we're excited. Jump right in. Just give us the how it happened to you. Where'd you go? Where you come from? Tell us the story.
Well, I'll give you the Reader's Digest version.
Great.
But I actually operated within the corporate world. So I worked for a large multinational and was on a career path thinking that I needed the solidarity of a big brother to work for. So I actually worked for Merrimont Corporation and I worked for IBM, and was introduced to an individual in the mortgage business, kind of by just happenstance. And I started asking him questions, and I was really intrigued by what he was doing and also the amount of money that he was making in the mortgage industry. And this was back in the late 70s. So I became very close friends with him and somewhat learned the business through osmosis. I mean, these are the days, to date myself and how far back this was. This is when you had a pager. Loan officers had pagers, then they progressed to pagers that you could actually get a message over, way before, cell phones were prevalent. So it was very interesting to learn how, we'd be going out somewhere, he'd get a text, or not a text, a page.
Right.
That's how far back it is. We'd get a page and he'd have to stop and find a payphone to be able to call a client back.
Right.
But so I listened to a lot of the conversations that he had, and I said, this is just basic selling. So you're getting compensated a heck of a lot more than I am working for a corporate structure.
Right.
So my wife at the time said, you're a pretty sharp guy and you're at least as sharp as your pal and you should be doing this. So I started in the mortgage industry really on a part-time basis and went into management and learned all of the steps that were involved at that time in producing a loan. And what I came to realize, having come from a corporate background, was that the mortgage industry at that time was like the wild, wild west. There were no systems in place. It was, you would have to physically produce a package that in many cases was hand typed or handwritten. And there were no balances and checks within it coming from, my IBM background. And it was just like, I think we can do a better job with this. So for me, it was like, this is an obvious choice. Here's an industry that I think is ripe for really being able to take to the next level. And then we've ridden that wave for the last 35 years.
Wow. It's so interesting that you talk about, I think you had a distinct advantage coming out of IBM. Just that organizational training that you had that we still talk about with originators about how important it is to plan your day, to plan your marketing, and to have a business-centric focus, which really creates more business.
Right. Yeah. Traditionally in the mortgage business, and it's not unlike other businesses where there's a potential for high profit, and really there's people that are salespeople, and then there's people that are salespeople that actually do what they're supposed to do. So we as our company, we've got originators that are great at throwing essentially what they think is a loan application, which is a couple of notes on a paper napkin, to a processor and telling them to run with it because they're great hunters.
Right.
But they're terrible at putting a loan together. And with technology today, we now see that those originators have a place, but they have to be molded to step out of the way after that fact. Because what we see a lot of times is a situation where an originator, he wants to be involved in the beginning, then he distances himself and then gets involved at the end without knowing what's happening in the middle.
Right.
And then it's just not a good fit. So in today's environment, through technology, through systems, we as a company and as we've grown, we've been able to adapt and give somewhat of a almost like going to a Chinese restaurant, and you can order from column A, column B, or column C, and you can choose how much of the work as an originator you want to participate in. If you want to just originate the loan, pass it off to processing, and then just know when the loan funds. Or you can become involved in every aspect or not. And then in determining what that participation level is, and then keeping everybody in their lanes.
Right.
So that they're not interfering with the process.
And as you look at producers today, and certainly you are an anomaly, top 25. There's 25 of you, right? I was top 50. Hail.
I don't know about that, but it's a lot of work.
It's a ton of work, and there's certainly been this growth in technology. How has the successful producer, changed from when you started to what a successful producer looks like today?
There's two ways to be able to answer that appropriately for you, because the fundamental difference is none, because you have to have the desire to succeed. And that's the driving force in really differentiating yourself from the rest of the group. So in that aspect, I don't think there's a change. Now, from a tools aspect, there is a myriad of tools that are available today that were not available. That I used to have to produce all of my own materials. We were working on IBM computers that had a whopping 10 megabytes of storage, and we thought we were like the
right. You were way ahead.
We were so far ahead technology-wise. Having come from essentially typing loan applications on Selectric IBM typewriters.
Right.
So today, the originator, some of the challenges they have because of technology is the fact that everybody has all the information in the world. They can shop for an interest rate, and seemingly maybe the consumer thinks they're getting a great deal, but it still comes down to the expertise level of being able to put the transaction together. So the experience level and the value add by being a, very informed, educated loan originator is still what differentiates a good originator from a great originator.
Interesting. Now, the big boxes in the mortgage space would argue that they could supply a rate and a couple of products, and that's really all the consumer needs. And it seems like that's the big fight now between your traditional mortgage originator as they compete against these institutional players.
Sure.
So what do you think about that? What do you think the truth is, and what do you think serves the consumer best?
Well, I think the consumer, let's start with that aspect of it. The consumer is best served by being able to obtain data and information. So the internet's been wonderful about making it so that everybody can get all the data in the world that they want. But it still comes down to the fact that if there's a wrinkle, if somebody makes application with Bank of America and there's a hiccup, they're not necessarily adept at being able to fix the problem. Because if it comes off the tracks, getting it back on the tracks within the big box is oftentimes very, very challenging. And the fact that most of those originators in that environment, they don't have the street experience. They don't know how to really put a transaction together. I'll give you a perfect example. We had a transaction that Bank of America was working on. There was a challenge on the appraisal. So the appraised value came in low. Nobody wanted to negotiate. Everybody felt that the appraisal was not good. We obtained the file. We run the file in an automated underwriting system. We get an appraisal waiver. So an appraisal isn't even required on the transaction.
Wow.
So the problem was taken care of.
Yeah.
Now, had Bank of America run it, looked at the findings, there wasn't an appraisal required. But they automatically order an appraisal, and once they had an appraisal, they were in.
Right, it becomes part of the file.
Yep. It became a part of the file.
Right.
So the consumer, we feel from our side of the street that they're much better served by having a true mortgage professional that understands, will take the time to realize what is in the best interest of the client. Because there's a lot of people, to your point, that do a really good job selling red shoes. Okay. And that's the one or two or three products they think that everybody should have.
Right.
But, some people like pink shoes and some people like white shoes and some like polka dot.
Yeah.
And you've got to have a wide spectrum of products, but more importantly, the knowledge base to know when it's appropriate to utilize those products and to educate the consumer as to what is available in the marketplace so they can make an informed decision. Ultimately, it does come down to the consumer's choice.
Yeah. So take us back in history. So you've made this transition, you've left IBM, you've written a couple of loans, and you're thinking, hey, I really want to try this mortgage thing out.
Sure. So
what did that look like for you?
Well, that looked like going from a very cushy salaried position to a 100% commission-only job.
Scary?
Extremely. Extremely. But it was nice because I was able to transition. So I had actually worked, part-time working at night doing mortgages. And my mentor at the time, he was kind enough to introduce me to some clients. And I was able to give them an experience that he hadn't even provided to them. Back to the fact that I was very system-oriented and very consumer-centric.
Okay. And so tell us about where your business comes from. Who do you target?
So our business has always been purchase-oriented.
Okay.
So it started with working with realtors. Then we evolved and added as an adjunct into financial planners, family law attorneys, forensic accountants. So really, we tried to identify anybody that could potentially refer business to us. Started doing relocation. So we were able to get clients that were coming into the marketplace from out of the area and get referrals from that. So we went to some of the large, at the time, credit unions and also large employers and offered training and exposure to different loan products and how we could help them in recruiting individuals and having people actually relocate.
Okay.
So for a while, California was a big recipient of people coming this way, and then it started to go the other direction, but we were able to capitalize that even with them going out of state.
Yeah.
Then we transitioned into the builder side and started working with some of the builders. And the builder business, back in the 1990s and 2000s was very, very lucrative. The demographics of the buyers have changed dramatically now. So that was a segment that we worked in, gained a tremendous amount of clients, and not direct clients. And this was one of somewhat the turning points in my career in really catapulting my business volume, is that I was working in our local market here for a developer, and we had to pre-qualify all potential buyers. They had a development that was one of the only beach-oriented developments that had been developed in Newport Beach in over 20 years.
And what year was this?
That was in 1999.
Okay.
So 20 years of no new developments in Newport. This developer decides to build this project. There's approximately 120 homes, and there's 5,000 people that want to buy.
Wow.
So we were one of two selected mortgage companies that had the opportunity to pre-qualify all of these people, to vet them, to make sure that they were qualified to be able to get on the list to see if they could get one of these homes.
5,000 buyers. Who cares if they ever bought one of those 150?
That was the whole point. And I recognized here's the database building model that, is like a dream come true.
Right.
So we
obviously we care. We want the developer to sell their 150.
And they had no problem selling
Certainly.
them. And we had a very high capture rate, but more so we were able to capture this massive amount of data that evolved into a database that we've continued to mine to this date.
Wow.
That's resulted in, several thousand transactions. And it's not the direct transaction, it's the indirect. So
what do you mean by that?
Well, the individuals, because there were only 120 people that got to buy, a lot of those people paid cash at the time. But of those 5,000, they were going to buy something sometime, somewhere, somehow.
Yes. And
their family members were. So we built a database, put it into our CRM, which at the time I had to write the CRM because nobody had one.
Well, IBM.
Well, yeah, but it was not like today where you can just get a Salesforce CRM and adapt it immediately. I mean, it was a slow, painful process that was very manual at the time, but played out in spades for us.
Wow. And was 99, so that transition and that database, was that your vault in
That was
growth?
my aha moment.
That was it?
Yeah, that's where the leveraging of data just created this critical mass. And from that point, it just snowballed.
Okay.
And that would be something that I would really emphasize to somebody in the business, because a lot of times you just feel you're just banging your head against the wall, and you've reached a plateau, and then there's that one thing that pushes you through. And that was the thing, because the amount of time that I had to invest in this, because it was Saturdays, Sundays. I mean, all day we were just sitting there waiting for people to come in, and then we did the pre-qualification. But
wow,
the amount of people that I met, not only for mortgages, I ended up developing a relationship with one of the borrowers that we had, and he and I ended up doing development projects later.
Wow.
So you just don't know what those are going to lead to. And that's the unique thing that a lot of people don't do. And I think the key to success for anyone, and for me particularly, is we achieve success by doing what others don't want to do. Because we can all sit around and talk about it and go, oh man, that's a great idea. This is a perfect concept. And then everybody leaves the room, and who actually does it?
Right.
So everybody knows what they should do. It comes down to who's actually going to do it.
Yeah. And this is actually a hallmark tip. You're talking to a buyer. That buyer's been referred to you by a real estate agent, a builder, a financial planner. And they're working on this specific transaction. And that transaction may or may not go. It almost doesn't matter. Your job is to service that customer so that when he buys, that loan comes from you.
Right. And oftentimes it's surprising because they may not like their realtor at some point, or something goes wrong. They didn't get the house that they thought they wanted, and they end up sticking with you.
Wow. Yeah.
But then even in any transaction, one of the things that I found to be very successful is that you thank everybody that's involved in the transaction.
Yeah.
Once it closes, you actually send a thank you to the escrow officer. You send to the listing agent. We actually have a gift program where we send gifts to the listing agent. And they're like, "What are you sending it to me for? I didn't give you the client. It was an opportunity for us to work together, and perhaps you're going to have a buyer in the future, and we'd like to have consideration."
Great idea.
Yeah.
All potential referring sources.
It's all about the referral.
So let's talk about marketing strategy.
Mm-hmm.
I'm assuming that you market to borrowers and you market to referral partners.
Correct.
What do those strategies look like?
High touch.
Okay.
So I have a list of all of my clients, their birthdays, anniversaries, built into my CRM. I get a trigger. So my first task each and every morning is to make a telephone call to every one of my clients' birthday.
Wow.
Okay.
And how is that received?
Extremely well. And it's never a sales call. So if you get the answering machine or voicemail on it, you just leave a message. "Hey, just wanted to call, wish you a happy birthday." That's it.
I love
End
that.
of story. Not, "Hey, give me a call back." Not, "Oh, how's your mortgage?" Absolutely nothing related to the mortgage aspect of it.
That's great.
And it's
happy birthday call. How many happy birthday calls do you do a day?
Over 100.
Wow. Wow.
Yeah.
I love that.
Yeah.
Okay, so you start the morning, happy birthday calls.
Yep.
Go ahead.
Then my day is fairly fluid beyond that.
Mm-hmm.
I don't have a real regimented structure as to my day, only because each and every day is different. So if it's month end, then there's a different strategy
Sure.
than as if it's the only thing that's 100% structured is those calls in the morning. That is my primary focus. So we've built this critical mass, and a lot of people fail to maintain relationships, and they work so hard to get them. And they would rather, in their mind, think about going out and trying to developing new relationships. And to me, that's even harder.
Right.
So you've developed a relationship. Why don't you nurture it just as you would in a relationship with a spouse or a girlfriend or whomever, and work towards building that relationship? Because here again, that relationship will lead to other opportunities.
Yeah. So borrower marketing strategy starts the morning.
Mm-hmm.
Happy birthday. What else is involved in your borrower marketing?
Information. Timely, relevant information. And it's specific to the particular client.
Oh.
So in the CRM, dependent upon the type of transaction and the amount of information that we've gotten through the interview process, the original application, we've got how many kids they've got, we've got their ages. You can take that and adapt. You know what the ages of the kids are when you did the application. You can kind of round about when they're going to be graduating. So you can send relevant information about their neighborhood, about their family, any number of things that you would feel that would be appropriate for them. So they feel that it's a personalized service and it's a personalized relationship.
Are you using Salesforce?
I use a variation of Salesforce, which is Jungo.
Okay.
So Jungo is powered by Salesforce.
And so, and I'm just trying to create something practical. So if I'm on the other, if I'm watching this and I'm thinking, okay, well, how can I do that? So I'm on my CRM, I'm collecting information off of my application. How do you transition that information you've collected to okay, so this is going to be a part of my information marketing. What does that look like?
Well, so let's go back a little bit. So our CRM is very sophisticated in the fact that we'll have the birth dates, we'll have the mortgage anniversary date. We have it set up so that quarterly on a subscription opt-in, we will send them a home valuation at no charge of what's happening to the home value, their home value.
Yeah.
And we've had very few people that don't want to receive that information unless it's a down market.
Right.
But it's,
Al, please do not send
please
this to
don't
me
remind me that my house went down in value.
Fortunately, that doesn't happen very often.
Well, it hasn't
we've
happened.
had a couple of
we've
seasons.
had a few of those.
Sure.
But so we've got birthdays, loan anniversary. If we have wedding anniversary, we have that in there as well. And we've only been caught a couple of times where they said, well, we got divorced, so that didn't work out so well.
Tricky.
But for the most part, it works. So birthdays, kids, ages, we try to track that. The interest rate that they've got. So we have a trigger that we can set it so that if their interest rate drops an 1/8 of a percent, 1/4 of a percent, we get an acknowledgement. We also have it so that it's tied that we have a product and a service provider that tells us if our clients run a credit report so that they're looking for credit and we get a trigger lead. So that's really critical. So here again, it's all about client retention. They may be looking for a car, which may turn to, maybe it makes more sense to do a cash out refi on your house.
Sure.
Or you've got student debt that you need to refinance. So it's just a number of triggers. So that marketing piece, and here again, it all comes back to that CRM and to the data. This is how you create opportunities. And by having that data, you can do a high touch and constantly stay with your clients. So I still do a actual physical mailed newsletter once a month. And then we touch our clients twice a month with an outbound engine information delivery.
Wow. That's a lot of touches.
It is, but it works.
We want to do what works.
It's all about doing what it works.
And so I'm assuming that as people join your company, you plug them in to this system and now they're doing this.
Yeah, well, with our company, somewhat of a unique aspect of our company is that we've built it as really as a fulfillment model. So selfishly, as an originator, I wanted a company that could provide the best possible execution. So as I saw our company growing, the more people we added, the more volume we did, the more exposure we got, the more that investors wanted to come to us. They offer us unique products. They seek us out because we do a lot of business and we do a good quality business. So it's a self-fulfilling prophecy. So for our loan originators, they have all these choices. And most of our originators that gravitate to us are individuals that have either owned their own company before, or they're a high-level producer that really wants to run their business the way they want to. So we have all of these tools in place. Whether they choose to take this piece or that piece, it's entirely up to them. We don't make any requirements. So it's by having all of the tools and all the, as I say, the arrows in the quiver, they can go out and confidently hunt.
Yeah. What do you think's the biggest challenge for a mortgage originator today?
Well, the biggest challenge that I see, particularly in the younger originators, is just call avoidance. They don't want to put the time in. And there's a lot of no's before you get a yes.
There can be, sure.
Yes, absolutely. And, and part of the problem as well, as we've got really aging originators, we have a very aging realtor population.
Right.
And that's the area that I don't see a lot of young people coming into at this point from a career path. So it's going to be very interesting to see as those realtors somewhat age out. They're tired of doing whatever they're doing, and we have to see who's going to replace them. But I think there's a giant opportunity there, and technology is really in the forefront of making that happen too.
Yeah, it's interesting to me when you think about, we've been through this great financial crisis,
Mm-hmm.
and there's been this historical pullback of salaries across the country,
Mm-hmm.
that more people aren't gravitating to the mortgage industry, when it's still such a high income industry.
Well, it is, but it's still regarded to a great extent as not tremendously stable.
Interesting.
And there's a lot of people that don't want to be just a commissioned person. They want some form of a guarantee. And that's where some of the larger models, the big box, they'll provide them with some form of training or stability or salary.
Right.
And I think that's just a recipe for failure, though.
Well, how many loan originators do you have at your office now?
We've got over 65 now.
What's the average income?
Average income is in excess of 100,000.
Yeah. So you go to work for a bank, you can be a mortgage originator, you can make $40,000 to $80,000 a year.
Right.
Or you can go to work for a company like yours,
Mm-hmm.
and be given tools for success, and maybe you make $100,000 to $500,000 a year.
We have some producers that make over $1 million a year, and they're very
not a
happy.
bad living.
Not a bad living at all. Yeah.
Do you have a favorite loan story that you want to share with us?
Oh my gosh. Favorite in good, bad, or indifferent?
We'll take, it's like whatever you've got but when you think about your career, like, oh, I'll never forget that one crazy loan.
I'll share with you a story, and it was the loan that didn't close. And that's actually my favorite story.
Oh, okay.
So we had a very large transaction. At the time, it was extremely large because of the time. And it was a $20 million transaction. And we had worked vigorously on this thing for an extended period of time. The borrower was not in the best of health, but it was a tax planning strategy for his estate and for his what would ultimately be his surviving spouse.
Oh, wow.
And I remember we got it approved. I called his wife, and she was actually at the hospital with him. And I said, we have loan approval. We will have documents for you tomorrow. And she said, you're about 10 minutes too late.
Oh, shoot.
He had passed away.
Oh, no.
And unfortunately, he passed, and that loan did not close. And they had not made provisions to be able to facilitate it through power of attorney. So it was a loss for everybody.
What a sad lesson on how important it is to plan, right?
That was the biggest lesson that came out of it. And their attorney was just mortified that he had missed that aspect of it as well.
And our primary audience for this segment is really mortgage originators. And I think that there's a couple levels of lessons in this story. One is, as you're guiding your client, obviously, the importance of getting them across the finish line and serving their needs, which you did. You were right on your game for that. But I think that the other lesson too is we're all getting older, and we need planning too.
Right.
And we need to have a will, and we need to have savings, and we need to have a plan for our spouses or our heirs and what that's going to look like. And it seems to me that we miss that area. And as we meet and talk about how we can grow our business as originators, and Al, you've really given some great tips that I think anybody could use, whether they were just starting out or whether they were a super producer like yourself. You've really shared with us quite openly, and I'm really grateful for that.
It's my pleasure.
And thank you. It's really things, practical things that I think that people can use to grow their business. And I know that's going to be well received. And the other piece of this, the personal piece, the human piece of us as people originating, is to have our house in order.
Exactly.
And so I appreciate you sharing that story, because it's a reminder to me and to all of us that, hey, our own life being in order is a part of what we do professionally.
Well, you don't want to leave your family in disarray. I mean, it's sad enough if you were to die, or if I was to die, I would not want to wish upon my family having to deal with all kinds of things that through proper planning could be avoided and create less heartache for them, assuming it's going to be a tough time for them.
Yeah.
So it's really important. And that's where we've taken an approach with our financial planners, and more so now than ever, the mortgage component can be such an integral part of all of the financial planning and even the estate planning. So we've really gone after a lot of the financial planners and had them actually involve us in conversation in the meetings with the clients to make sure that, here again, opportunity to take a look at how their mortgages are financed. If they have mortgages, maybe they need a reverse mortgage.
Yeah.
We've just executed a $6 million reverse mortgage as a tax planning strategy for a client.
Wow.
And they never would have thought of utilizing this vehicle, but it allowed them, and it's very complex, but they took the $6 million, they were able to buy leveraged life insurance. So finance the life insurance to get an enormous amount of premium or benefit through a finance premium, which gave them the opportunity to take care of some very significant estate planning and tax strategies.
Wow.
So there's all kinds of ways that an originator can insert themselves in and create value.
Well, and certainly, we're tasked with, as originators, we're tasked with caring for the biggest stressor of American families.
Sure.
Their largest debt generally is their household debt, that home mortgage.
The biggest financial transaction that most of them are going to make revolves around their house and obtaining a mortgage.
Right.
So that we have a very significant fiduciary responsibility to work in their best interest.
Wow.
Yeah.
Well, I'm glad you're at the helm.
Well, we're having fun with it. That's it. More than anything, I had done an interview recently, and one of the questions that they had asked me was, what is the single most important thing that you would tell an originator coming into the marketplace in the market today? And my response is that you have to be relevant. You've got to know what's happening today. You have to make sure what you're applying and supplying to your client is relevant for their needs, relevant to the marketplace, and relevant to everything that you're working towards.
Yeah.
So
great advice.
Yep.
Well, Al, thank you so much.
My pleasure.
What a pleasure.
All right.
Thank you for your time.
Anytime.